All right, guys, welcome. I wanted to do a brief trading video today. By brief, I mean less than 30 minutes. This will probably be pretty extensive because I got a lot of information I want to go over here. But as you can see here, I took off a lot of the indicators here. The only thing I have on my charts right now are the bands, and I also have the EMAs down here, the major EMAs. So I took off the Coral, I took off the THV, and just the other things that I use because I really want you to see price action at its finest here. Rather than focus on indicators, divergences, and things like that. Because as for me, when it came to being a trader, I studied for many, many years using indicators and all kinds of things, and I found myself really going nowhere until one day I said, okay, I'm sick of it. I'm taking off everything on my charts, and I'm looking at price because there's got to be a way to be able to predict this market. So for me, I had to take off all the indicators, and I really studied price for many, 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 many months. And finally, I began to see the light. So what I did is I took off a lot of the indicators here, and I want you just to be focused on price alone here, so that way you can hopefully get a better understanding of how the market functions, how the market works, and how the market is moving. So with that being said, I want to show you some potential areas where you may want to get in on trend trades. Now, a lot of my trading that I do is based off of major levels, but I do also do trend trading. I look for pullbacks and good trends at really strong levels with lots of confluences. So I kind of want to give you an idea of how to do that in this little video. So what you're going to do first of all is to get into a trend trade. Obviously, you've got to find a trend. A trend can be defined as a series of higher highs and higher lows, or lower lows and lower highs. So let's start to the left here. You can see here's a bottom in the market. We pushed up, pulled back, and we pushed up again. So clearly you can see we are very much in an uptrend. This is actually a pretty wild uptrend. We went from 100 all the way up to about 122, about a 2200 pip push up on the weekly charts for the dollar yen in really a very short amount of time here. So we've got a very strong uptrend here in play. So now what we're looking for here, though, is we're looking for a pullback to get into the market. Typically for me, the areas I'm looking to get into pullbacks on are going to be higher time frame bands, which are these things right here, or I'm looking at the higher time frame or the current time frame even, Coral, which I do not have on my chart. It's merely a moving average. Or I'm looking for Fibonacci retracements to get into the market. So the Fibonacci retracements, let's talk about this. But first of all, let's find a healthy trend. Obviously, you're probably not going to get into the first wave here. So second wave, definitely not a viable option because it didn't pull back enough. For me to get into a trade based off of Fibonacci levels, I want to see a 61 to 78% retracement in the trend. Why do I want to see it come back down that far? Because I want my risk to be limited. Like, for example, in this scenario right here, here's the bottom, here's the leg up. You can see the pullback was about 50%. I tend to look for entries once I get down to around the 61.8%. Why do I do that? Because this then becomes my risk. Maximum risk. It should not go any further than the last swing low. If it does, there's something seriously wrong with your trend. So I'm looking for around a 61.8. You could jump in on 50%, but then if you only go back up to the high and create a double top and fall apart, then you've made this is your reward and all this is your risk. So you're really getting a one-to-one. And I really don't like to be in a situation where I'm only getting a one-to-one on my trades. So I do like to minimize my risks just a little bit. Again, the other option you could do is get in here and have the stop a little bit tighter. Most of the time it will work, but again, trading is very subjective and you can do it how you want. But as for me, I like to see a 61% retracement. I really don't like to see a 78, to be honest, because what's happening? If we have a big push up here in the market and then sellers come in and push this all the way down to 78, what does it tell you? It tells you there are a lot of sellers present in the current market. And if you're in a strong uptrend, you don't want to see a lot of sellers. So in that situation, you're going to find yourself probably not seeing a push back up to the last swing high if it comes down to the 78. Not always the case, but a lot of times that does happen because the pullback was a bit too strong. And down, if it were to come down to the bottom, while this is a massive, massive, massive level, I call these structure levels down here. While this is a very strong level and it's probably not going to fall apart, because think about it, you have all these new buyers. This is all the further the last set of buyers could push price. These new buyers push price all the way up to here. So obviously, if they come all the way back down to right here, these buyers right here are going to want to buy up the market and push it up. So your risk is very limited if you were to get in down here. But with all these sellers present, the buyers probably won't be able to push price up very high most of the time. So your reward is much more limited if price were to come all the way back down there. So for me, the secret number really is around 61.8 to a max of 78% retracement. So in this case, we went 50% and we continued to move higher. And then we see another pullback here. We tried to push up, pulled back again, pushed up. And again, I'm looking for higher highs and higher lows in order to get into a pullback. This is a little bit of consolidation here. You can see right here, we break out of the consolidation. We make a much higher high. And obviously, we have higher lows as well. And you can see that. I'll draw my trend lines right here for you. You have higher lows and you have higher highs. This tells me that there is very much a trend in place. So once you make a higher high, then what you want to see is you want to see a pullback. Again, I like to see a pullback of around 61.8% to get in. So let's go ahead and draw our fibs out here. And you can see in this case, we went down to a 61.8 and almost to a 78. Not quite 78, but see what happened next. We pushed up into the highs, wasn't quite able to make a double top. But again, if you got in between the 61.8 and 78, this is your limited amount of risk. Typically, I will put my stop not much below the last swing low because it really shouldn't go below that. In all honesty, it shouldn't go below this trend line. But at an absolute max, it should not drop below this. If it does, your trend is probably coming to an end for sure, and you're going to want to get out of the market. Especially after a big, big move like this. So you can see we had our pullback to the 61.8 and almost to the 78% retracement, and then we popped up. So there was plenty of money to be made here. If you were looking to go long it again, I looked for trend lines. I also look for higher time frame bands. In this situation, it'd be this right here. We came just shy of the band, and then we popped back up to the top. So we didn't quite make it to the band there. Again, like I said, we do look for trend lines. The coral as well is a great area to get into, which again, I don't have on my chart right now because I want to simplify things for you here. But this is a good area for a retracement. You can see it move back up. Now what you have to look at is how high did price go. Again, like I said, it came down pretty far, which isn't real healthy in a trend. So you can see that we were not quite able to make new highs up here, and then we began to fall again. This time when we fell a very significant amount. Now, how is this top here different than this? Because you might be looking over here and saying, well, we had a double top over here. Yes, we did, but here's the difference. This double top created a new swing low, higher swing low. So I'm not really concerned about the trend at this point because we broke the highs and continued higher because we had a higher swing low. In this case, we had a lower swing low. And because of this is what makes me think, hey, this may be the end of the trend. And by the way, by the time we got up here, I would be thinking to myself, maybe I should probably look left on my chart to make sure there wasn't major resistance, because what you don't want to do is you don't want to get into a situation where you're buying into resistance. So you go to the next higher time frame and look what we have here. You have this level we're dealing with right here. This right here is why this fall right here happened. Back in, let's see, this would have been June of 2007, you had a drop all the way down to here, about a 4-year drop, and it took with it 5,000 pips. So obviously, once we get back up to these levels, and by the way, I did give this out to my group long in advance too, saying watch out for these levels up here because we did fall off of it here before, so we're probably looking to sell off again. You can see it's a major pivot in the market. We fell over here, resistance over here, over here. So this is a pretty big pivot in the market. So I was definitely watching this for a reversal up here, and so you had to be very careful about buying on pullbacks towards these levels. That's very dangerous. And now here's the thing. Here's the beauty of this. Because you were coming into major resistance, what you want to see is you want to see your new downtrend confirmed, and then you want to get in on the first pullback. These are my favorite kinds of trend trades to get into. Once you have confirmed your top at resistance like this, top at resistance, then you definitely look for a short. Why? Because your risk is going to be limited, and your reward, because it's the potential beginning of a new trend, your reward is going to be huge. This is where you get your really big trades at. I had one earlier this year that I was trying to call on USD NOK, and I know some people got into it, but it came about 10 pips shy of, or well, if you want to count the way they are supposed to count exotics, it came 100 pips shy, but really most people would probably count it as 10 pips shy. But that thing went about, I think it was like 1,500 or 2,000 pips, which is equivalent to 150 or 200 to most currency pairs, the way it moves. But the point is this: it was coming into levels like this, it was creating a bottom and getting ready to turn around. And because it was the first pullback in the new trend, there was opportunity for it to go really, really far. Same scenario for the dollar yen weekly. Again, remember, we're at major resistance over here. So you're looking for probably a major fall, because big areas of resistance, especially on higher time frames, are going to create big falls. So you can expect a big fall to happen once this top is in play. So you want to watch for it. So where do you get in? Again, here's the top, push down, pull back. Here's the lower low. A lower high, and then a lower swing low. So this tells me right here the top is in fact confirmed and in the market. So what you want to do now, again, you've got a lower low, so you want to get in on a 61.8 to 78% Fibonacci retracement of the last move. Those are the magic numbers. If it goes above 78, I begin to get a little leery, thinking the trend is maybe a little stronger than what I'd like to see. So grab your Fibonacci tool here. Here's the last leg. You look for a pullback of 61.8 to 78. It came up to the 78% retracement, and that's where it continued to fall. Notice it tested this area right here. You have a bottom here, a bottom here, bottom here, and a bottom right here. To me, this is like a giant head and shoulders top, so I know this is a major breakout level. This is why the bulls are putting up a fight here, because if this level breaks, the bears have officially taken over this market. So of course the bulls are going to fight it one more time. Anytime you have breakout levels like this on higher time frames, such as the daily, the weekly, and the monthly, you can get some really nice bounces, and I watch those very carefully and I trade those a lot. So just want to throw that out at you. But again, a lot of that is going to be in the updated course that I'll have out early in 2018. But anyways, so we're looking for a sell-off up in here, because again, this new downtrend is confirmed. We are at major resistance. So I'm looking for a 61.8 to a 78% Fibonacci retracement. Where's your stop loss? You should not have a move above this level right here. So your loading zone would probably be up in this area. You can wait for confirmation on maybe a daily time frame using your bands if you so desire. But you can also just jump in at 61.8, 78. This would tend to be my loading zone. But again, I want more confirmation than just a 61.8. I don't just get into the market because you're hitting a Fibonacci. I never, ever, ever do that. I'm always looking for other types of confirmation. Again, maybe it's the coral, maybe it's the bands, maybe it's trend lines. And we happen to have a few areas of confirmation on this trade setup. Again, this is a dynamic trade setup. These don't happen a lot on the weekly time frame, but you're going to find them quite a bit on the 4-hour and the daily time frame. But in case you can't see the other areas of resistance, let me show them to you. First of all, you have this right here. Here's your trend line. Notice we hit it here, we hit it here, hit it here, hit it here. We broke down below it, and now we are retesting the trend line. So you have trend line resistance right here, and you also have a trend line connecting the tops right here as well, which if you extend out, ironically enough, creates a sell-off right here as well. So you have two trend lines right here. You have a 61 to 78% Fibonacci retracement. Remember what I said. The bands are also important, so go to the monthly time frame. You can see the upper band was right there. Remember, again, the bands act as resistance. In a downtrend, the upper band is going to be resistance, and in an uptrend, the lower band is going to be support. So you have a trend line here, you have a trend line here, and then you have an upper band as well. So this is a fantastic area to get into the market. So now, for example, if you would have got in up here at about, let's see, let's get your tool out here, about 123.50, your risk is basically this. It may sound like a lot. You're talking 200 pips. But again, this is a weekly chart. And if you go down just to test the lows again, which is typically a good first profit target, you're talking 116 to 123.50. That is 750 pips of reward and 250 or 200 pips of risk. So you're really getting 3 times what you are risking. That is an excellent reward to risk. So in this case, you could have taken your profits here, got out of the market, and made a killing. If you're risking 3 to 1, then let's say you're putting $1,000 on the trade, then you walked away with $3,000. Even if you're winning only half your trades, which, well, frankly, you should be winning way more than 50%. But even if you're only winning 50%, if you're winning 3 times the amount you're losing, you're going to do very well for yourself. But again, you have to stick to these very strong setups. My win ratio is typically between 80, sometimes 90%, depending on the markets. But again, I'm waiting for strong setups like this to get into the market. I'm not trading every day. Especially because I'm a swing trader mostly. I'm looking at the 4-hour, the daily, the weekly, and the monthly for trade setups. But that's the dollar-yen weekly. Now let's follow where it goes next. We came back down here to these levels again. This to me is a head and shoulders top, and it's a breakdown level. So I know that if this level breaks right here, this market is going to fall apart. So the bulls don't want this to happen because the bulls have been in charge for a really long time. So obviously they're going to put up a fight, which they did, and they caused the market to bounce once again right here. And you can see right here we came back down one more time, small bounce here, and then it collapsed. So let's say that you probably wouldn't want to get in on a pullback here because we didn't create a new swing low. But if you did, again, remember, you're going to probably want to get in on a 61.8 to 78% retracement. And again, we did go up to the 61.8, not quite the 78, which is good, which means the trend is probably still pretty weak here. So you can expect perhaps more downside. So you can see after we had a small bounce here, we got a big washing right here. Big collapse down, small push up, definitely not a 61%. Continued to fall right here, push back up again, made a new swing low right here. For that matter, we did right here as well. From here, here's a low, here's the high, push down, pull back. So let's grab our Fibonacci tool again right here. Let's say we're looking at this right here. Actually, let me draw it from the top so I get this right. Here's the bottom, push up, pull back down. So you could look for a retracement around the 61.8 to 78. In this case, it went to 61.8, which was the upper band, and it was a first touch of the upper band. So in this situation, you have a very strong selling opportunity right here. Not only do you have the Fibonacci, but you have the upper band as well, and it's the first touch, which are super powerful. So then you can see we have another sell-off, and because we created a new swing low and a lower swing high and a lower swing low, you can probably expect the market to go all the way down to the bottom and maybe even further. You can see we came down to the major EMAs right down here where we had another bounce. So again, on this next bounce, again, let me move our fibs here. Again, here's the swing. right here. So you would look again to buy between the 61.8 and 78. Again, you don't want to just get into the market because you're hitting a fib. You need other confirmations as well. But again, in this case, if your stop is just above the 100, which is where it should be, then again, you've made money on this once again. And right here, here's the top. We push all the way down to the bottom. Massive, massive, massive sell-off. Let's get rid of our fib tool. So here we go. Here's a big sell-off. And then again, you look to get into a pullback because the downtrend is still very, very strong. So here is our Fibonacci retracement. It came up to the 61.8, wasn't quite able to make it to 78. Again, notice I don't like to get in on the 50% retracements because, again, my risk is too big unless you're willing to tighten it up a bit. But we did come up here to a little above the 61.8%, and then we came back down and we basically retested the bottom again here. Now, this is where price action gets interesting. We just had ourselves a really, really, really dramatic fall in the market. So now let's go to the monthly time frame. This is what we're dealing with right here, by the way. Notice here is a huge leg in the market, and now we are pulling back, and this is actually a very big area of confluence in the market. It was this area down here. I was telling my group we need to be looking for longs down here. Why were we looking for longs down here? Well, first of all, you can see, look at all this consolidation. This is a monthly chart, and we consolidated for 1, 2, 3, 4, 5, 6, 7, 8, 9 months in a row. So the market came back down here, and we had some consolidation here as well. Actually, let me draw the line right here for you. You can see here was a top, pulled back, hit it again, pulled back, hit it again, pulled back. Finally broke above it, pulled back down to it, pushed up, pulled back down to it, and broke through. So this is going to be a very, very heavy area in the markets. And if you look to your left, you can see this was resistance here. We had a bit of a wick through support here. You had a double bottom here, down over here. And again, this is the 100 level too, which is going to be a major psychological number for the market. So you always got to watch numbers like 100, 120, 140, 160, 150, 200, things like that. If I zoom out a little bit, you can see there was also a bottom right here, and I can't go any further back than this, unfortunately, but there was probably one over here. But you can see this general area. Let me draw in another line here. Right around 99.60 to 101, you have a major bottom here, spike up here, push up, retracement, or actually a fall back down here, came up, tried to break it again, broke through, tested a couple times here, broke through. So naturally, when you come back down to these levels, you have to watch for buying because this is a major pivot in the market. And if you get your Fibonacci tool right here, you can see this was a 50% retracement, and a lot of times the market will retrace around 50. Again, like I said, I like to get in at the 61.8 to 78%. These are my magic levels right here. But you had a 50% Fibonacci retracement. You had a major pivot in the market. And on top of that, this is a really big deal. Let me zoom back in here. When this bottom was being formed over here, we had insane divergence on the THV on the weekly and the monthly. I mean, it was insane. I don't have it on here now. Again, I'm trying not to show the indicators too much here, but the divergence on this was absolutely astonishing. And the THV, when it diverges in this manner, it is incredibly accurate. So all of this together had me thinking we were definitely getting ready to pop. So, but we want to watch price action. What did price action do? We pushed down here. We pulled back up here. We did not create a new swing low. This is the first indication that maybe there is a bottom being formed. And then we pushed up here again, made a new lower high, and then we pushed down again. And again, notice right here, we are not making new lows. In fact, the lows are a little bit higher. So this is very concerning if you are bearish the market. This is definitely telling you that maybe this thing is getting ready to reverse. And then from this point here, we pushed all the way up to here. Take note of what has now happened. We have a slightly higher low, and we have a higher swing high. At this point, you have to realize this trend is probably over. And then right here, you can see we had a nice spike down. This was on November the 4th during the United States presidential election. The market collapsed right here, and then it quickly recovered as Donald Trump began to give his speech, and then it took off. Unfortunately, what I like to see is I like to see a nice swing up and then a 61% retracement back down. To me, this isn't a very strong push up, honestly. You got a bit of a wicket. If you had a solid close here, then I may have considered a pullback. But again, first pullback in a new trend. What are we looking for here? Again, we're looking for a 61.8 to 78% retracement stop down here. It shouldn't go below that. Additionally, you had a trend line right here, so the trend line should have stopped it, if not this last swing low, because if it breaks the swing low, then you may have continued downside. So had we had a stronger close up here, again, I like to see a little bit higher swing high than this, then I would have definitely considered going long down here on a pullback. Did not happen, unfortunately, even though I had been warning for many, many weeks of a potential move up, and this thing just lost its mind and went absolutely crazy. So it went up all the way from 100 all the way up to really 119 without stopping. It was quite shocking, honestly. But then we created a top up here, again, which is where this trend line was right here. And then we pushed down off of it, and then we pushed back up right here. And notice here you have a lower swing high, and then we make a new swing low. You have a lower swing low. So what are you looking for at this point? At this point, you should be looking for a potential drop once again, because you have a lower low and a lower high here. So you're looking for a potential drop in the markets. So again, where are you wanting to get in at? Typically, I will look again around the 61 to 78 is where I'm really looking to get into the market. But again, I'm using the upper bands. I'm using Coral and things like that to confirm, because I want many things telling me that it's okay to get into the market. So what you can do here is, again, grab your Fibonacci tool. Here's the last swing. And again, it comes up to just above the 78%, which is a little higher. It actually went a little higher than 78, which would have me a little cautious about selling, because really, again, like I've been saying, if it goes up this high, that means there's a lot of buyers in the market, and that's typically not what I want to see. 61.8% is a nice area for the market to reverse. Again, above the 78, that tells me there's a lot of in this case, new buyers coming into the market, which is really not what I want to see. So, but when you did see this thing drop, and it did not quite drop to a new swing low. So this is where you have to be very cautious. So hopefully you took some off once it got towards the bottom here if you were to take this. But again, your risk is just this little bit right up here. And then you had this much of rewards. You definitely wouldn't have got stopped out, but hopefully you made a little bit of money if you would have taken that. So what happens next? We have a higher swing low here, just barely higher, not a lot, nothing to really write home about or to be too overly concerned about, but looks more like a double bottom to me. But then what happens? We go up to the high again. So at this point, you are probably like, well, what's going on here? I'm not really sure, because we have basically equal lows and we have basically equal high. And in this scenario, we are basically in limbo, and there's nothing we can really do, because the market is not sure where it wants to go at this point, because again, you have pretty much equal lows and you have equal highs. So until there's a higher high or a lower low, we're really uncertain about where the market's going to go next. So really not many trading opportunities at that point. But then you see another fall in the markets. This time we do create a new swing low. Again, nothing too dramatic, but because it did create a new swing low, I would look for sells once it gets up to here. And again, this level up here was the last swing high. These sellers up here push prices to new lows. So naturally, these sellers are not going to let the market reverse and just blow through these levels. It is possible, but most of the time you're not going to find this. So I call this a structure level. But again, in this scenario, you would probably look for shorts around the 61.8 to 78%. Actually, let me move the Fibonacci tool here, so I have it on this move right here. But again, you're looking for shorts around 61.8 to 78%, and again, a stop loss just above the highs at a max. So your risk is basically up in here, and then you're waiting for a push down. And in this case right here, we had a push down to the Fibonacci of 50% based off of this leg right here. So again, ever since over here, it's kind of been a limbo, but you could have taken some shorts over here, making a little bit of money. But as of right now, this thing is very undecided where it wants to go. If you look at the monthly time frame, though, what we have here, let me actually take off. Let me fix this here, chart shift, so you can see it a little better. Let me take off some of these lines here. What is happening right now? So we had this big move up, and then we had our 50% retracement. We have not been able to create a new swing high or even a double top, and it's come back down. So this thing is really not sure where it wants to go. What I am seeing as of right now, though, is we have pushed up. We're trying to break these upper bands up here. We came down. We rejected the bottom. We pushed back up. We rejected the bottom again, pushed back up, and we rejected the bottom again, and we're pushing back up. So it's showing a little more strength right now than it is weakness, but it does need to break through this trend line right here. So really we have a bit of a war going on for the dollar yen as far as I'm concerned. But once we break through this upper trend line and we're able to break, again, let's go back down to the weekly time frame. This level right here has been a rock solid level in the market. You can see that we tested it up here and failed. We tested it up here and failed. Tested it up here and failed. Tested it here and failed. Tested it here and failed. So we keep failing off of this level, but now we're hitting the trend line. We hit the trend line 1 time, 2 times, 3 times, 4 times, 5 times. Typically a 4th, 5th, or even 6th hit of this trend line will create a breakout. So it'll be interesting to see what happens on the dollar yen here. But until we are able to break this trend line and until we are able to break these highs, if we were to break these highs like this, that means we have a higher. Here's a high. The next high would be up here. And here's the low. Here's the low. So we'd have higher lows and higher highs. So we have definitely a new trend in play. And you could look for a pullback. And if it was to break up here and pull back, this would probably be a good area to get into because you'll have this trend line as support and this trend line as support. Very much like over here when we had this trend line and this trend line here. So, but as of right now, this thing is very choppy. It doesn't know what it wants to do. But if I were to make a wager, I'd be a little more biased to the upside than the downside because again, we are making a higher low and we keep hammering these highs up here and it keeps rejecting these lows on the monthly time frame. So it'll be interesting to see what happens because there is a lot of geopolitical risk going on with the dollar yen right now because of what's happening in Korea. So if that guy was to do anything crazy, this thing would obviously get hammered. But as of right now, this looks a little more bullish than it does bearish to me. But again, there's no way to really trade this on a higher time frame basis until we get a new trend in play here. And right now it's just chopping around. So, but I wanted to walk through the dollar yen chart with you so you can see potential areas again for retracements. Again, a lot of times I use the 50 to 61.8 or not 50, 61.8 to 78% Fibonacci retracements to get in. But again, I've got to make sure there's trend lines present. I want to see bands present. I want to see the core present. I need a lot of things confirming. I have to have price action, number one. That is numero uno. Price action must be there and saying, hey, this is what it's looking like is going to happen. And then I need confirmation upon confirmation on top of that. And when you do that and you're able to get in at good levels, you can minimize your risk and you can get a good reward and you can get a lot of money off of these trades. And again, remember what I said, the first pullback in a new trend is the best one because your reward is much, much greater. So this right here was the first pullback. Look at all this potential reward you could have made on this trade. Same thing goes for this. If you would have been able to get a proper setup down here and then a pullback down to here, you could have got in and you would have been good to go. Let me bring up since I mentioned it earlier, let me bring up the USD NOK as well. This is one that I was looking at trading also And so you can see what happened here. We had a big push down, pull back, push down, double bottom. Notice what happened here. Now we have a brand new swing high right here. And then you have a push down right here. So right here you go. You have a higher swing low and you have higher swing highs. So what I was actually looking for is this was the area I was looking to get into the market. So let's draw our Fibonacci tool here. I was looking for a bit deeper pullback. I actually wanted the 78%. I was being a little bit too picky, but why was I looking to get into this? Because you have a nice little trend line right here. See, I was being a little bit too picky. I missed it like I said, by about 10 pips. If it would have, let's see, the bottom was right here. My target entry was right here. If that, maybe a little higher. It was like that much. That's how much I missed this entire move by, because I was being a little bit too picky. But again, notice what's happened. You got higher swing lows. You got higher swing highs here. You got a trend line in place. This is your risk right here. This is all the risk. This is your potential reward. All this reward for this little bit of risk, because again, it's at the bottom of a potential trend and it's getting ready to reverse up. So there's plenty of room. And this has gone on for, gosh, this was October. So this has been moving up for 2 months. Imagine just sitting by limbo, just doing nothing and watching just money pour into your trading account. I mean, that's the beauty of swing, or in this case, position trading. But again, you have a trend line right here. You have a Fibonacci right here. You can't see it here, but there was the coral right here as well. So again, trend line, price action. You have coral. And if you go to the higher time frames, it also was the lower band. And it was the first touch of the lower band. Always remember, the first touch of the lower band is always the strongest opportunity for a reversal. So you have a first touch of the lower band on the weekly. On the daily, you have a trend line. Daily, you have a coral. You have price action agreeing. You have a 61% retracement. Everything about this was basically perfect. There was nothing that I could find on here that said I shouldn't be buying. But again, I did miss it by 10 pips. And then you can see it went all the way up to here. So your risk on this was really about about 2 to 3 grid bars. And this thing went up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So basically, so far, you've got a 4-to-1 at least a 4-to-1 reward to risk. So if you wager $10,000 on this, you're up $40,000. And if you look at the weekly time frame charts here, we are now beginning to move up into some serious levels here. If you draw your Fibonacci tool, we are at the 61.8. So I would definitely, if I was long on this, I would definitely be looking to get out. As far as where could this thing be going, let's draw our little trend line right here. You can see right here we have a trend line right here. And we also have a bit of a trend line right about right here. This is the 78% up here, and this is the structure level up here. So I really don't see it moving much up beyond this without a push back down. If it is able to go that far, this trend is getting very, very extensive here. So, but again, you were able to catch really the first wave down after a new high, new low. But again, you have to watch your higher time frames. You don't just want to get into a market because you have a higher high and a higher low. You have to have many confirmations, and preferably you want to be at major support levels, and you want to make sure you're watching your bands and just everything else. So, but again, make sure you're watching price action. Pay attention to the highs, pay attention to the lows, pay attention to the consolidations, where the market's at. Those will be your guides, but trading is much, much more than just watching a series of indicators and getting in on trend lines and things like that. You really have to have an understanding of where the market's going and why the market's doing what it's doing, and you're going to do that based on what price has been doing in the past. But hopefully you guys got something out of this video, and I'll try to get you out another video sometime in early 2018. Have a wonderful holiday.